Good afternoon, ladies and gentlemen. Please take note of the following house rules. The information in this webinar is intended to provide general information only and does not contain or convey any legal or other advice. All efforts have been taken to ensure that the information provided in this webinar is accurate. The organizers and speakers reserve all rights in the material provided. By default, you would be muted when you join the webinar. And if you have any questions along the way, please type them at any point of time into the Q&A panel, and we will address it during the Q&A sessions. For the questions that are unanswered, we will work with the panelists and share their responses with all participants after the webinar. As such, it is important for you to indicate your name and company in your Zoom profile in order for us to do the necessary follow-up.
Businesses expand into Global Connect at SBF helps Singapore businesses expand into overseas markets. Since November 2019, we have guided Singapore businesses as they seize business opportunities in Asia and beyond. From identifying emerging trends to closing deals, we provide a full spectrum of overseas business expansion services. With Global Connect at SBF, you can learn about new markets, customers, and free trade agreements across the globe. Land opportunities and scale up in new markets, both physically and digitally. Localize overseas operations to ensure sustainable long-term success. Our Singapore Enterprise Centres in Indonesia and Vietnam also provide on-the-ground business and market development services. We also provide a dedicated digital B2B marketplace to quickly scale your business overseas. With Global Connect B2B, set up your company profile in minutes and start contacting thousands of regional partners and customers. Last year, Global Connect at SBF reached out to over 2,000 companies, completing many overseas expansion projects through its network of trusted business specialists and professionals. In 2021, Global Connect at SBF will also launch new initiatives for Singapore businesses to position themselves on the international stage. Explore business opportunities across ASEAN, South Asia, Japan, and other markets by joining us at Festival, our flagship digital event. Become part of the Global Connect at SBF community today and start enjoying exclusive benefits. Customized business advice, access to our overseas Singapore Enterprise Centres, preferential rates for services, as well as structured training, one-on-one advisory, and assistance on using free trade agreements to extract greater commercial advantages abroad. Global Connect at SBF.
Singapore.
Hello and welcome to Green Building Financing, the first episode in the Sustainable Financing Awareness series. The Singapore Business Federation is working together with UOB as our knowledge partner to organize a series of complementary webinars on topics revolving around sustainable financing on the first Tuesday of the month at 3 p.m. And we are indeed very happy to have you join us at the first episode today on Green Building Financing. My name is Shu Lim from the Singapore Business Federation, and I will be your host and moderator for today's virtual event. A warm welcome to all of you who are joining us today from your office or at home. Now, the Singapore government has just launched the Singapore Green Plan 2030, which outlines our green target for the next 10 years. But what does going green mean for your business? Where can you start your sustainability journey? And what exactly is green financing? Over the next 1 hour, we will be hearing from our esteemed speakers from Global Compact Network Singapore, UOB, and KPMG on this topic. This will be followed by a Q&A session for the next half an hour. Together with UOB and KPMG, the SBF will be conducting a business consultation session. After this webinar, for companies who may need assistance on their financing needs, if you are keen to internationalize, say investing in a building, factory, or warehouse overseas, or have specific questions regarding green building financing on local and overseas projects, please email my colleague Zhiquan, and we'll be happy to offer you a complimentary tailored business consultation session provided by SBF, UOB, and KPMG after this webinar. To kick off this event, I would like to invite Ms Esther Chang, Executive Director, Global Compact Network Singapore, to share with us on the topic, understanding sustainability and how it impacts businesses. Esther leads the Global Compact Network Singapore initiatives to raise awareness and adoption of corporate sustainability efforts in Singapore and the region. She is the main liaison between GCNS and the United Nations Global Compact. Esther has dedicated her career in the non-profit sector, as well as grassroots NGO in Canada and Singapore. Without further ado, Esther, please.
Hi, thanks very much, Sue. Hi, everybody. Good afternoon. Thanks to SBF and UOB for inviting me to speak today. Over the next 15 minutes, I'll be doing some sharing that gives an overview of what is corporate sustainability and why should business care, and also some of the resources that can help you along the way. Next slide, please. Next slide. Good. So over the next, thank you. For the over the past 6 months or so, GCNS has been meeting with members, SMEs, to learn more about, what is it that they care about, and what is it that they're looking at when it comes into sustainability. So I just wanted to share 2 quotes here, and they really reflect the much broader SME and business group that we have interviewed and surveyed. So here it talks about the pressures, right? So they're experiencing pressures from their suppliers, from their buyers, particularly those that are coming from the North America or Europe, where they're starting to ask companies to show their sustainability practices and performance, right? And in this case, the SME also talked about once they started on this journey, they were able to see more and more business opportunities that have come as a result of taking on sustainable practice. And here I really like this a particular story from one of our members from the build sector, where they mentioned that instead of looking at simply from the how much are things going to cost to go sustainable, let's look at it from the cost of inaction and learning how to do more with less. Okay, so let's move on just quickly to go over a few concepts of sustainability, because we obviously been hearing a lot about this. You can't, open the newspaper without seeing something that pops up about sustainability. So just get everybody on the kind of same page and same definition. Let me talk about, share essentially 3 key concepts. Next, please. So the first, you probably hear a lot about this, which is around ESG, and what this stands for is environment, social governance. And this is asking companies to look at, how their business operations and strategies are impacting the dimension of environment, social and governance, both a positive impact as well as a negative impact. You might also have heard this term triple bottom line, and associated with this is the 3 Ps, which stands for people, planet, and profit. So again, this is asking companies to look beyond the economic gains, that when they are looking at growth, they also consider the positive impact that it can contribute to the people and planet. So in essence, sustainability development, right, is looking at the development that meets the needs of the present without compromising ability of future generations to meet their own needs. So here, the definition by the United Nations is that corporate sustainability is companies' delivery of long-term value in financial, environment, social, and ethical terms. So we hear this sentence again often, that sustainability is, it's not a destination, it's a journey, and it's one that will be evolving, and asking companies to look at take a long-term perspective on what it means for their business to thrive in an increasingly uncertain, in a low carbon and climate resilient economy. Next slide, please. So here's just to show you, right, some of the different dimensions that are put under this ESG, right? So you can see under environment, you have things like, material sourcing, water management, waste management, energy consumption. Under social, occupational health, labor management, human rights, governance, anti-corruption, anti-competitive, it's looking also at your board. These areas are inherent to the DNA of all businesses, right? So these are likely things that many have already done, right? But it's a matter of formalizing the work processes and management systems and closing the gap in some areas where there may be areas for improvement. Next, please. Okay, so the next section, I'm gonna talk about the push and pull factors, right? Why are people paying attention to sustainability, and why is it important for business, and businesses need to start to get on board? Let's first look at, from the risk perspective. Next slide, please. So this is a recent report that was put out by the World Economic Forum, where they outlined, the top risks that are likely going to happen and top 10 risks that are already impact our businesses today. Not surprisingly, if you look at the top 5, a lot has to do with the climate, right? Extreme weather patterns, human environmental damage, biodiversity loss, but also really what's very palpable at this point, infectious disease, right? Which is, there's also lots of connections to the climate. So, we have, as businesses, we have to ask ourselves, right? What is the cost of inaction? Can we continue on business as usual? And I think time and time again, it's proven that it's not possible. So companies now need to prepare for not just in time scenario, but just in case. Next slide, please. So we'll talk about the push and pull factors. There are going to be regulations, customer expectations, but some of the pull factors will be around financing, which other panelists will speak about, and also improvement on operational project outcomes, and also as a way to attract and engage your employees. Next. So here's just an overview of helping people to see the connectivity between the various regulatory compliance, moving from global, the global regulation will trickle down to the national, then to the industrial, sectoral impact, and then obviously to the company. So just taking an example on the global, with the Paris Agreement, which is very much focused on climate mitigation and change. At the national level, it's flowed down to our green plan, and within the green plan, you see different sectoral, industrial guidelines and regulation that's come out of that. And then obviously as a company, by understanding these trends, you can also better navigate local laws and expectations as they evolve. Next. The United Nations Sustainable Development Goals. Some of you might be quite familiar with these 17 colorful tiles. There are 17 goals, but behind the 17 goals are actually 169 targets. They identify the targets that companies and nations can work towards to achieving these goals. And they provide a shared footprint for us to look at how do we build a more sustainable future. All the UN member states have signed on to adopt the goals, including Singapore. So what must companies consider when they look at this? I think it's very important to look at materiality to assess what's actually very impactful for your business and your operations, because it's a lot out there and it's impossible to tackle them all. So it's important to see what is most relevant for your business. And another idea to emphasize is that these goals are interconnected, right? So action for one will have knockoff effects on the other goals. Next. So I want to just spend quickly to talk about climate, Paris Agreement, because this has grave implication, and certainly the Green Plan that was mentioned earlier touches on how it supports a Paris Agreement. So in short, it's really the pursuit to limit our global temperature to under 1.5 degrees Celsius. Every member state have put out a national determined contributions and emission targets, and it's a collective effort to support climate change mitigation and adaptation. So now in Singapore, what this means is that the goals are, it was recently revised that it will peak by 2030, and by 2050, our emission have to come down by half, and we will reach carbon neutrality as soon as possible in the second half of the century. This has then floated down further down into the launch of the recent Green Plan that's multi-ministerial. It's very ambitious, and it's really encouraging to see different governmental bodies coming together for this. And when you then go further down to see what's packed underneath, you see the introduction of carbon tax, among many other legislations, guidance, and that support the collective effort for climate mitigation in Singapore. Next, please. So essentially, what does the Green Plan tells us? It's signaling that, the focus areas around waste management, water conservation, green procurement, and the emission of greenhouse gas emissions, green building and infrastructures, energy efficiency, renewable energy, and of course, green investments. Next. So another push factor is customer expectations, as mentioned by one of my earlier quotes. So increasingly, buyers are asking for integrating sustainability criteria into the tender process. They are requiring suppliers to provide information about their sustainability performance with a pathway they may be going on to get to reach carbon reduction or carbon neutrality. They're looking at risk assessments and action beyond tier 1 suppliers. Also, we're seeing buyers are working across their industry and stakeholders to also enhance supply chain and also traceability. So let's now talk a bit about some of the pulls, the opportunities that come by taking on sustainability, right? Investors are identifying that as ESG being a very important criteria in how they assess their investments, right? You hear from, for example, Temasek, right? Temasek has asked all their portfolio companies to reduce their carbon emission by 50% by 2030, and then neutrality, so net zero carbon by 2050. Now, this doesn't just hit the TPCs. This also has implication on the supply chain. So we're seeing very bold statements from the financial actors, from also the regulators that are pushing for support for green investments and also bring financing along to help SMEs go on this determined path to be more sustainable. Next slide, please. So you have, here's a quote from Ravi Manna, Managing Director of MAS. He mentions the future of capital is green. What are these forces? Why is it going that direction? Well, the growing recognition that climate change is a global priority. There's been advances in the approach to sustainable investing, and also there's changing investor preferences. And what we see here is on the left is a report by EY. Even from 2018 to 2020, we're seeing an increasing demand from investors looking for non-financial disclosures. Next, please. So another key pull factor rather for companies taking on sustainability is that they're able to better attract talent and also engage their staff. There are many studies supporting this, right? Especially with the millennials and Gen Y, Zs, and all the alphabets, they are looking to join companies that have a central social purpose beyond profit. And what this then translates into, by integrating sustainability practices, that it can help you bring on a more diverse workforce, bring on new talent, attract top talent, increase employee satisfaction, reduce turnover, increase stability and reliability of workforce. And what this all translates into is cost savings, as well as also better productivity. Next, yeah. So what we are seeing really is that moving the conversation around sustainability is not a matter of, if or whatnot. It's just a matter of when. It's moving from options to necessity. Sustainability can improve project and business risk management. It can help attract financing. It can lower the cost by adopting circular economy approach as an example. It can uncover new pathways for collaboration or new innovation. It can establish greater employee commitment, and it can also improve relationship with stakeholders and cementing long-term business partnerships. Okay, so now, how do companies get started? We get these questions asked a lot at GCNS, so I will just share some resources for you to tap into the network here in Singapore that can help you accelerate your journey around sustainability. A little bit about GCNS. Next slide, please. We are the local chapter of the United Nations Global Compact. We are the largest corporate sustainability initiative in the world, and we work off the framework under the 10 principles that look at human rights, labor, environment, anti-corruption. It's a very integrated approach to looking at sustainability. Our network provides networking platforms. We have tools and resources, capacity building, as well as we run awards to showcase businesses that have demonstrated excellence in sustainability. Can we please move on past the next 2 slides, please? Can we please move on to the next slide? Thank you. So I want to just, mindful of the time, share a couple key resources where it can help you along your journey. The first is RISE. This is Responsible Index Communicated for Enterprises. This is a very good tool that can help create a baseline for how your company is performing along your key sustainability pillars, right? I liken this to a bit of a health report. So if you need to know your baseline before you know how you can improve. The results generated from this tool can help you communicate your engagement with your internal stakeholders, but also serve to communicate your sustainability efforts externally. We also have a tool called the Carbon Emissions Reporting Tool. It's what the name says is to help companies monitor their emissions, paving their way to create a low carbon impact. Next, we also are launching soon a SME Sustainability Toolkit, where it will have some key information to help you get started on the journey. We often hear that it's not for the lack of information that's out there, but really is where can you get information that's easily understood and can get people to take on the small step to get on this journey. There's also the UN Global Compact Library. This is all complimentary, so lots of information should you want to look deeper into any sustainability topic. Next slide, please. So finally, I just want to make a call to everybody in this on this webinar that it's really about taking small steps, right? Sustainability is a journey and not a destination. There's a lot we have to achieve and the urgency is there, but no one can do everything, but everybody can do something. So I really encourage you to take the steps, for example, even by being here today, to learn about sustainability, increase your level of awareness so we can collectively act towards the 2030 agenda. Thank you very much.
Thank you so much, Esther. That was a very comprehensive presentation on the GCNS. So for audience who are watching the webinar, okay, thank you, Esther. And Esther is representing Global Compact Network Singapore. For you audience who are watching this webinar at home, please type in your questions at any point of time using the Q&A function on Zoom. And now, we are indeed privileged to be joined today by 2 distinguished speakers from UOB. First, I'd like to invite Mr. Ivan Cheng, Senior Vice President, Sector Solutions Group, UOB. Ivan is an ESG specialist within UOB Group Wholesale Banking. And over the years, he has helped many clients to develop sustainable finance framework and structure sustainable finance transactions across various industries. And Ivan will address this session and tell us about what is green financing, the different types of green financing, and introduce the new GSLS, Green and Sustainability Linked Loan Grant Scheme, that was launched by the MAS at the beginning of this year. Ivan, please.
Thank you, Shu. Good afternoon, everyone, and thank you, SBF, for setting up this collaboration with UOB and KPMG. And most of all, thank you for all the participants on joining this. So myself, I come from UOB Group Wholesale Banking, and I'm just going to talk to you a little bit about what is sustainable financing or green financing before I pass the stage to my colleague Kelvin, who will tell you a little bit more about green building. So I think the first question that we want to demystify is what actually is sustainable financing. And as you can see from Esther's presentation earlier, the company like yourself need to establish your own sustainability strategy, as in like, why do you want to pursue a sustainability strategy and what are you trying to achieve with your sustainability strategy. Sustainable finance is just one aspect of it, and what we are able to do is an enabler, and this enabler is to help you to fast track your sustainability strategy so that both your financing and your strategy are in line. So on that note, so that's why I think finance is important. And here we are. The agenda that we're going to cover would be the different type of financing, whether it's green or sustainable. We'll tell you a little bit of our UOB Sustainable Finance Framework, how the bank is here to support you. And last but not least, a little bit of the GSLS, which is the Green and Sustainability Linked Loan Grant Scheme. Okay, next slide, please. Next. Okay, so first question, how is sustainable or green finance different from your normal financing? And I think the one key parameter that everybody should take note of is actually impact, right? The difference between a sustainable or green financing versus any generic form of financing is the impact that we try to achieve, be it in terms of saving more water, more waste, or saving carbon, right? And the sustainable finance market is actually very simple. It's broken up into two types. One is what we call sustainability linked loans, and the other are what we call green loans or green bonds. So what is the sustainability linked loans? Earlier slide, please. Yes. So for sustainability linked loans, it can be a general corporate facility, and the aim of this loan is to support the borrowers in your ESG practices. And the way we do it is that we will set up with you certain KPIs that we want to achieve, or we structure it based on certain ESG ratings. So with that, we can structure a sustainability linked loan for you, and the idea is to support you on your sustainable journey. And following from that, we have this group of financing called green loans, and then moving upwards to the right, green bonds. Now, the difference between green and sustainability link is that for all the green stuff, we need a framework. And what the framework spells out is a number of principles that we have to follow. And one of the key things being impact. And that's something I will tell you more a little bit later. Okay, next slide, please. Okay, so this slide basically shows you the different categories of sustainability linked, green loans, and green bonds, right? And if you look at the top row, these are the key differences between the three types of product in terms of the classification, the verification, the use of the proceeds, and the guidelines that they follow, and the estimated cost. Now, for the first row below it, which are green and social bonds, this is where the bonds are issued to the public market and where the standard of care is the highest. So in this sense, you need very rigorous verification standards in terms of second-party opinion or a third-party assurance. And you must have a framework to govern the use of proceeds. And for this, you need to follow the IGMA principles, and the cost to issue a green bond is close to 100,000. But the good thing is you can benefit from the MAS Sustainable Bond Grant Scheme. Now, following from the bonds, if you come down, would be what we call green loans. This could be bilaterals, this could be club, or this could be syndicated. But similarly, because it is a green product, we would require the same, almost the same level of robustness as the green bonds, where you need a second party opinion or a third party assurance, a framework, and the use of the funds. And it's slightly cheaper at 30 to 50,000 because you do not need to issue it publicly. And last but not least would be the sustainability linked loans, where there's no framework, there's no SPO, but we would structure it with an ESG rating or some KPIs that you want to measure. And the cost of setting up a sustainability linked loan would be slightly cheaper at about 10 to 30,000. Now, some of these costs can be claimed, and I will share it with you a little bit at the end. Next slide, please. Cool. So if you ask me what is a framework and why is it important, a framework is actually a precondition for any green loans or bonds. And the framework can be aligned to different principles depending on what you're trying to do. But basically, all frameworks have 4 core components. Number 1, it governs how the proceeds are used. Secondly, how the process are evaluated. Number 3, how do you manage the proceeds? And last but not least, impact. And that is the positive, tangible impact that you want to deliver either in environment or social, right? And then following from that would be the guidelines. And post disbursement, it is the responsibility of the borrower to report on the impact matrix so that we know exactly what are the positive impacts that flows from our financing. But it is not as complicated as it seems. I think Esther did share some tools that you can use, and I'm sure our the big 4 auditing firms, including KPMG, will be able to help you. And it's pretty much like your ongoing accounting and regulatory reporting. Next, please. Now, for sustainability linked loans that I talk about is where the company may not fall squarely into what we call a green sectors, but yet we understand that we need to support you in your transition. Now, for this, we have a sustainability linked loan products. We can either be structured in option 1. We can obtain a ESG rating for you. It will take 8 to 10 weeks to complete. And we will look at some of the key areas of concern to the company in the E, S, and G space. Now, option 2 is where we do not have an ESG rating. We can craft out certain what we call sustainability performance targets. For example, you aim to save X% of carbon, or you save X tons of water over a period of time. And then we can structure something whereby if you meet the incentives or the KPIs, we may be able to structure certain incentives for you. And that's usually how sustainability linked loan works. Okay. Next, please. So what goes into a ESG rating, in case any one of you is contemplating one, is that it looks at the 3 key pillars of environment, social, and governance. Now, in the environmental pillar, it's actually quite comprehensive. It looks at many parameters, such as your strategy, how you dispose of your products, your input consumption, supply chain management. Similarly, for social, you will also look at your labor rights, your labor practices, health and safety, etc. And in governance will be your independence of your board, your objective, and all these parameters will then be put together, and they will run through a certain algorithm, and vendors will provide you with an ESG rating. And the ESG rating is a very balanced view of your company in terms of the 3 pillars. Okay, next, please. Now, so after having heard what I probably said, you would probably be thinking, oh my gosh, it's probably so difficult to get green financing. And that's where I think we will be introducing to you our green frameworks. Next, please. So in order to help our clients in their sustainable journey, and instead of having our clients doing their framework individually, UOB has come up with 3 sustainable finance framework, what we call green or sustainable loan framework. Now, what does this framework covers? Basically, first of all, we have the real estate sustainable financing. It covers both green and sustainability linked loans across 7 asset class, ranging from office to restaurants. And this was advised by KPMG. My colleague Kelvin will tell you a little bit more about our real estate sustainable financing solutions. Now, in the middle, we have a smart city sustainable finance framework. Now, what this does is that we recognize that cities are getting more urbanized and we need to build smarter cities. And in smart cities is where you have the use of renewable energy, where you have green buildings construction, you have energy efficiency, EVs, and even water and waste management. Now, all these will come together under our smart city financing framework. And so as to enable companies that operate within all these verticals to avail of green financing from UOB without having to come up with their own framework. You can reach out to us to find out more details. Last but not least, we also understand the need to decouple economic growth from the use of finite resources. And that's where we have the green circular economy framework. Now we aim to support companies in the 3R industries from recycling to reduction to renewal. And for this framework, we are able to support companies in plastics, e-waste, even metals recycling, and even companies are engaging in circular designs and inputs. So with this framework, which are all credible and externally verified, the bank would be in a position to support you in sustainable finance by putting you into the correct category and provide you with seamless processing, as well as helping you with the reporting, right? And so that's a synopsis of the 3 green frameworks that we have. Okay, next please. Right, so I will not touch more on this, except that this probably gives you a bit more color on our real estate sustainable finance framework, what it does, and how it's also aligned to the SDG goals. Next, please. And this is our smart city framework. And this was one of the 3 umbrella framework under the auspices of the MAS GSLS grant. And under this framework, we aim to support companies that you see over there, whether you are in renewable energy, in water, you're in EV industry or energy efficiency. We were able to qualify you for potential green or sustainable financing. And the benefits to you are pretty clear right at the bottom of the slide. Okay, next please. Then last but not least is our circular economy framework, where we think that we can support facilitators as well as enablers towards a circular economy. As you know, we cannot keep consuming the finite resources that we have to support economic growth, and we need to close the loop, and that's where UOB will be able to support assistance to company in this sector. Next, please. Okay, so so much for our program. Maybe I'll just talk to you a little bit about the MAS Green and Sustainability Linked Loan Grant Scheme. These came out in November 20, and the aim is to support companies in their sustainability journey. Next, please. Okay, so basically, the GSLS scheme, the way we call it, is divided into 2 tracks, Track A and Track B. Now, Track A is for corporates, whereas for Track B are for banks and FI who are looking to develop green and sustainability linked loan framework, which is what our smart city was about. But I think for the audience here, perhaps Track A would be more interesting for you. And if we go to the next slide, please. Now, what is in Track A, right? So basically, this loan grant scheme is to help you with pre-origination as well as post-origination costs. Now, in pre-origination, you would have your, what I mentioned earlier, the external review, the SPO, and also maybe to get your ESG rating. And on the post-origination, we are talking about, verification or the reporting to be, that is aligned with your responsibilities under the green framework. Now, what it covers is up to 100,000 over a 3-year period. The loan size is a minimum of 20 million, and the loan itself must be at least 3 years. And as long as the financial institution originating the loan is based in Singapore, or 50% originate from Singapore, then the corporate will be able to qualify under the GSLS Track A. Okay, next please. Right, so these are the eligible expense. Please note that it excludes legal costs or documentation costs or certification costs that is what we call part of a usual business. But it will cover the pre-origination in terms of developing your framework, your review on the assurance and everything on the use of proceeds. Okay, next please. Okay, so I believe that's the last of my slide. Maybe I hand it back to Shu, who will introduce the next speaker. Thank you.
Thank you so much, Ivan. And you've just heard from Ivan, Senior Vice President, Sector Solutions Group, UOB. Our next speaker from UOB is Mr. Kelvin Ngo Yongwei, First Vice President, Real Estate and Hospitality, Sector Solutions Group. Kelvin has spent the bulk of his 26 years career in the real estate industry, in market research, consultancy, regional investment and asset management with real estate, private equity funds and REITs. Kelvin will speak at this session and tell us more about UOB real estate, green and sustainable financing. He will also address what is a green building, what is a green loan, and what are sustainability-linked loans. Kelvin, please.
Hi, good afternoon all. Thanks, Shu, for the introduction. My name is Kelvin, and I'm from the Real Estate and Hospitality sector under the Sector Solutions Group within the Group Wholesale Banking in UOB. As Shu has earlier mentioned, in my previous life, I've done some private equity investments on real estate. So happy to take any questions later on if anything pertains to investment as well as valuation on green buildings. Is something of interest to any one of us here. Right now, allow me to just share with you UOB's real estate green and sustainability financing, and so especially the green building solutions for corporates. Next slide, please. Okay, very quickly, the agenda. We will start with the key macro trends as we are seeing in the green building space in the region. And this will underpin our discussion around how we use our UOB framework to address challenges as well as the opportunities in the green buildings. Probably of keen interest for us will be what are green loans and sustainability-linked loans, what we call SLL, and also how we can tap on UOB's framework and solutions going forward. Next slide. Next slide, please. Okay, what we understand this session is more targeted for Singapore corporates. We think it's equally important to appreciate the large green building movement that is gathering momentum across the Asian region. And maybe some among us has operations or looking forward to venture into the region. Hopefully this will come in useful during your journey. Grabbing the headlines, of course, is the estimate by the International Finance Corporation, where they projected that the green building sector in East Asia, as well as South Asia, will hold about approximately $17.8 trillion worth of investments opportunities by the year 2030. Now, for a better visual, if you can just shift your eyes to the right hand, you can see the red bars in the top right chart, where residential is expected to hold about $9 trillion and commercial at about $7 trillion. So this dovetails with the larger narrative. I think most of us who have worked in Asia before, this story about the urbanization of Asia, where by 2030, more than half of the about 4.1 billion people will be living in urban areas in South Asia as well as East Asia Pacific. So this really shows that there's a greater need for residential and commercial building floor space going forward. So it's something that's gathering across the region that we have actually experienced and also saw with our own eyes. And it's not something that is something we can afford to kick down, kick the bucket down the road. Yeah. Also, the next couple of points is really to show how regulatory push is a key driver for green building development as seen in Indonesia as well as Thailand. Now, as a regional bank, we want to support our clients across our regional footprint. So we appreciate the real estate market in Asia Pacific is, as well as in South Asia, is rather fragmented at different stages of development or growth. And by extension, the green building standards will also naturally differ. We do not just want to adopt the lowest standard and apply across the board, but do some work to ensure that some level of consistency in our requirements in the standards across the countries. So just going back to the earlier point, for example, in Indonesia, you will see that the regulatory building codes for green buildings as of June 2019, it reached more than 25 million square meters of floor space from over 6,000 buildings in Jakarta and Bandung. These are the two pioneer cities in the implementation of green building codes. As well as for in Thailand, if you look at the introduction of the new building energy code, it has resulted in green buildings in Thailand rising by 3 times in the 5 years between 2012 and 2017. So this is really a testimony to how green buildings is gathering momentum across our regions. Yeah. Next slide, please. So over here, going back to the point about trying to keep the our standards consistent. So over here, what we're showing here is that different green building standards in Indonesia called Green Ship, GBI in Malaysia, Green Mark in Singapore, as well as trees in Thailand. So the essential point we want to reiterate over here is if you look across this energy efficiency comparison, you'll notice that various variables are actually similar across the standards applied in these 4 countries. So essentially what we are trying to say is we hope that this consistency is appreciated by everyone, and that when we apply this criteria to our green assessment, is consistent, and therefore we are not taking the lowest hanging fruit, i.e. the lowest standard in green building standards. Of interest to you would be that local standards actually are developed from the LED global standard, which also with some modification reflects the local interests as well as the local developments in the countries that we've highlighted over here. So hopefully by extension, the local standards will provide ample rating visibility and encourage the market to accept this relative to the international standards. Because the fact of the matter is different countries will have different development and different priorities, because the LED standards would cover, say, the more mature economies where they include the 4 seasons, whereas for our part of the world where, example, in Singapore, where it's more a tropics, so the standards need to be modified accordingly. In fact, BCA standards was deemed as the tropical version of LED, if you will. Yeah. Next slide, please. So over here is just another slide to reiterate the point that the volume of green loans and SLL has actually grown by leaps and bounds between 2014 and 2019. As you can see, the SLL has actually spiked up between 2017 and 2019 in view of a greater awareness of this growth in this space. Next slide, please. Back again to the earlier point about regulators' role here. It's very important to reiterate that the regulators' push beyond 2020 and beyond is very, very critical. I guess without them giving the roadmap or trying to encourage the industry to partake in this whole movement, we probably will not be able to see green building standards, being developed across the region. So, in the interest of time, I won't go through every individual country, but certainly for Singapore, as alluded to earlier by Esther as well as Ivan, we have the latest green plan announced recently. So where we are targeting to have 80% of our buildings by GFA to be green by 2030, as well as to have the super low energy buildings, 80% of them green by 2030 as well. So with the government push in Singapore, I think there's much to be done going forward and much activities in this space. The rest of the countries I will not highlight here, so I just basically provide here as well, just for your reference later on when you get to receive the slides. Next slide, please. So over here, we also cover Hong Kong, China, and Australia. But please be mindful that some of these regulations may change over time. So I think this is as good as when we capture it prior to the preparation of this presentation. Next slide, please. So over here, what we are sharing here is really how UOB has actually been a key participant in this sustainable financing movement. As you can see in all the projects that we've done, or rather the loans we've done, be it SLL together with the likes of CapitaLand, Mapletree, as well as City Development and Frasers. We also done green loans with them, as well as with real estate funds like Lucrum Capital, the Dual Project, and also with construction companies like Team Build, even for the likes of Park Hotel in the hospitality space. So this is just more assurance that we are in a good position to assist you in your journey, and hopefully we can get into some conversations post this session. Next slide, please. Okay, without much ado, let's jump into what is the UOB Real Estate Sustainable Finance Framework. Next slide, please. So why did we create this Singapore's first sustainable lending framework? I think it started in June 2019, where we decided that we need to create a cogent and consistent process by which we can transact green and SMLs that's in alignment with our bank's ESG objectives and targets, and also allow the creation of better financing structures and solutions within the framework to support our clients. Also, incidentally, our bank's maiden 1.5 billion US dollar sustainability loans was issued last month. This is issued and driven by our sustainable finance framework. So in a nutshell, what we're trying to say is we want to use this framework to set the direction, to make it happen through giving guidelines, tools, and internal trainings for everyone, and so to raise awareness as well as to ensure that we are on the right track and that we align ourselves with the relevant global and regional and even national guidelines and standards, because this is going to be a long journey. Yeah. Next slide, please. So as alluded to earlier by Esther, we have this United Nations Sustainable Development Goals. Our framework seeks to address all this as well. So just flashing the key ones that here is more applicable to green building. So I want to bring your attention to a couple of them. So for example, the goal number 30 under climate action, we acknowledge that buildings are responsible for 40% of the global greenhouse gas emissions, and green buildings is known to produce less GHG emissions. More importantly, green buildings are key to building sustainable communities and cities. And again, if you dovetail back to earlier discussion about how IFC sees a lot of growth in terms of urbanization, this really plays into that story. Last but not least, I think I want to highlight, given how the COVID-19 pandemic has a very negative impact on our economy as well as jobs, I think within this new driver of green building movement, we hope that we can increase the demand for green buildings and also create jobs and boost the economy. Next slide, please. So what we're trying to do with the framework is basically to simplify the sustainability journey for businesses. And by that, we mean that we essentially have just layering over what Ivan has shared earlier, are the green loans for green buildings, the green loans for specific improvement projects. For example, you might be familiar with this term called AEI, Asset Enhancement Initiatives, touted by the REITs as well as some of the building developers or building owners, but they want to do some additional alterations to enhance the project's efficiency as well as the valuation as well. As well, last but not least, the SLL, which I won't go into it because I think Ivan has covered it pretty well just now. Next slide, please. So some of you may ask, so Kelvin, what do you really cover in terms of real estate? Because real estate covers so many asset class. So if you can just kind of like put it in a nutshell for you, it will include things like hotels, restaurants, residential developments, data centers, offices, retail, as well as industrial. By industrial, will mean things like warehouses as well as factories. Yeah. Next slide, please. So what are green loans? Again, next slide, please. Next slide. Okay, green loans are defined as any type of loan instruments that's made available to finance or refinance existing or new green projects. So green loan must align with 4 core components listed below. Essentially, the use of proceeds, the process of evaluation and selection of projects. There must be a certain plan, how you evaluate, what are the criteria, and how you select your projects. As well as you have to be a lot of clarity in terms of what's the management of proceeds. How do you manage? For example, the fund should be, pumped into a dedicated account, and what are the various clearance you need to do before you make payments and stuff like that. And last but not least, of course, the reporting. So for example, we on a periodic basis, say on an annual basis, we need some kind of reporting in terms of what are the communications you have with the certification authorities, and also what are the things that you have done to the building and the use of funds and proceeds and stuff like that. Again, I won't delve too much into this. We were happy to share this eligibility criteria for green buildings across the regions. So I want to just highlight 2 key ones, so 3 key ones. If you look on the left side, we have the leadership in energy and environmental design. This is more a US standard, applicable across the world, of course. So it's one of the global standards. The other way is the H next to it. The one that's more applicable for us today is more the Bca Green Mark. This is actually a very well-regarded standard. In fact, I would even call it a regional standard. Based on what we understand from some of the announcements made by the likes of CapitaLand, this has been adopted as the green building standard in, say, in Malaysia or even in cities in China. So these are the standards that you can just take a look to see when it's adopted, what's its validity, what are the categories that they cover. For example, Bca, they cover the smart healthy building, how they use the resource, what are the advanced green efforts being made, and as well the building energy performance and things like that. Now, more critical is really what are the ranking standards. Now, as I mentioned earlier, the market is very fragmented across the region. So you can see various standards will have different terminology like platinum, gold, gold plus, silver, certified. So, and even for some, we have 6 stars, 5 stars. So we kind of lay this out for you so that you are aware of, what are the standards across out there and the terminology used. But to cut a long story short, these are standards. And of course, when we onboard you as a client for green loans, we have a certain standards we want to apply. So maybe for certain markets, we will have certain standards, but we are open to discussion in terms of your ESG journey. The next slide will also share some of the certification standards for, say, Malaysia, Australia, and Indonesia and Thailand as well. Yeah, so it's for your consumption subsequently. Next slide, please. Okay, here what I want to showcase is really a few transactions we have done. So for example, in this building, we actually did a AEI project for 51 Central. So this is really more to help the AEI journey, and we allow them to embark on this amendment and alteration such that they attain their Green Mark Platinum Award. Yeah. Next one, please. This is essentially to showcase a project we did in New Zealand. Even though initially the standard was not part of our first core requirements, but we made some comparison, we did some work, and we felt that it was quite up to the global standards in many ways. So we onboard this as well. So we are really open to every efforts to make buildings green. Yeah. Next. This is a conversion of an existing term loan for the construction of a prefabrication hub. So we do cover this space as well. Next slide, please. And this is a case of a hotel for Lucrum Capital, where we convert an existing loan to a green term loan facility for the acquisition of a property. There's a 4-star hotel redevelopment. This was extended under our UOB framework. Now, what are SLL? Again, I won't belabor upon because I think, next slide please, because Ivan has actually covered in detail. The key thing is, of course, the key 4 components where, the borrower needs to achieve ambitious, predetermined, and sustainability performance objectives measured by their SPTs. So this will cover areas that we are mindful of. For example, what is the relationship of the borrower to your overall CSE strategy? That means you must link your loan objectives with your ECSR strategy or the target setting. Sorry, can you go back to the previous slide? The previous slide. Yeah, so measuring the sustainability of the borrower as well as the standard review as well as the reporting. Next slide, please. Last but not, okay, then this is just to cover essentially about the objectives and attainment of ESG ratings as well as you must make sure that you have a clear achievable targets. Next slide, please. These are the ESG ratings for SLL, so that if you are able to achieve this as a constituent of these indexes, you will be considered eligible for SLL considerations. Next slide, please. Very quickly, this is the last slide where we want to share how we have converted existing revolving credit facility with CapitaLand More Trust. So just to share how our track record on this front. So on that note, I will end my call. I think I've exceeded the time. My apologies. Back to you, Cherine.
Thank you so much, Kelvin. Now we have just heard from Kelvin, First Vice President, Real Estate and Hospitality Sector Solutions Group, UOB. Our fourth speaker is Ms Cherine Fok, Practice Lead, Sustainability Services, KPMG Impact, KPMG Singapore. Cherine is the Practice Lead for Sustainability Services for KPMG Impact Singapore. She is a council member of the Sustainable Energy Association of Singapore and member of the British Chamber of Commerce Sustainability Committee. She's also part of the Green Finance Working Group of the MAS. Cherine will tell us about green finance to future-proof assets and share practical approaches on green financing to help your company rebuild and recover post-pandemic. She will dive into recent sustainability developments related to real estate sector, including their broader implications. Cherine, please.
Thank you. Thanks, Shu. Just testing the sound. Okay. It's very nice to be here today with our friends from UOB as well as SBF. And thanks so much everybody for dialing in today this afternoon. So I'm Cherine and I am a director with KPMG Services. Of course, I don't work alone on sustainability, seeing that it's such a huge topic. I mean, very often we are working with our sector teams. And in this particular case, I also have my financial services colleagues on the call with me. And together also very often for green buildings, we are working with our real estate sector team. Next, please. I think today I just wanted to quickly share on how important it is for us to be looking after our ESG performance and impacts. There is a lot of movement in this space, as you know. So on almost every other day, we'll see some publications on the newspapers talking about environmental and social issues. Even amidst COVID, and actually because of COVID, there is also a lot more focus on social components of well-being and, including for real estate developers, if you are holding a hospitality sector asset, or you're holding a mall, for example, you will realize that COVID has a huge impact on your performance or your revenues. And therefore, there is also a huge focus on social aspects of your performance, for example, ensuring health and safety of your visitors as well as your workforce. Now, because sustainability is such a huge topic, I think we have all to be very clear that directionally, there will be a lot more expectations around your corporates on how you're performing on environmental and social issues, right? Singapore has a green plan, which we'll touch on later, but generally all real estate players are very much in the middle of the activity and action. So if you look at the chart on the left, you'll see that 35% of REITs globally are already exposed to climate hazards. So we're not just talking about how as a company, you are creating ESG impacts on the environment or the society around you, but that you yourself, like in the example I mentioned for COVID, you yourself are actually under a lot of business transformation pressures in order for you to remain sustainable in the economic sense. All right. And you notice that other than physical risks that I mentioned, there is also what we call transitional risk for climate change. So all real estate players, regardless of whether your buildings are in vulnerable areas, in actual fact, because the economy has moved so much and people have different expectations around what kind of landlord they want, companies or your tenants may have their own sustainability agenda. You may also find that your top line revenues are being affected or your competitiveness is being affected if you do not have a sustainability strategy. All right. So what we are telling our clients is please be aware and please be alert to the changes in the operating environment that you are in. Think about it from the perspective of your top line and bottom line. How are you going to be impacted in terms of your revenues? Are you going to be less competitive? Are you going to be less appealing to some of your tenants? And then in terms of your bottom line, how will you be affected when there are more regulations around climate change, carbon taxes? There are more regulations around fines and penalties for non-compliance with environmental or social laws. All right. And as this sustainability is being viewed as a business driver or business consideration, you will naturally find that it is much easier for you to think about what needs to be done and what kind of improvements you need to make. Or even for some of you, it might even extend to transforming your business model or pivoting your business into something that makes much more sense in a post-COVID world. For example, if the building that you own is no longer going to be viable for an office building because uptake is just too low when people start working from home, what other sustainable uses can you change it into that will give you a much more sustained and longer term life? All right. And in many of these things, of course, when measuring your performance and when communicating with your stakeholders on what makes for a good sustainability performance or good sustainability strategy, there are certain frameworks that are very popular. Earlier on, Kelvin shared several of these frameworks, including green building frameworks like LEEDs, EDGE, and so on. Now, these are all very popular frameworks for green buildings, meaning that whether or not you are operating in Singapore, many of these are universally recognized. And if you are a green building holder, you're basically in line with the minimum requirements or minimum expectations of that particular government. All right. Other leading frameworks that companies use, especially in the real estate sector, to measure whether or not they are doing well on sustainability would include GRESB. So GRESB measures a few different dimensions around environmental management and impacts. And some of my real estate clients submit their properties for reviews under GRESB, and they get us to either help them with the exercise, to do a gap review, help them improve their performance, or to perform a verification. And of course, for many of you, because you are REITs, you may also find that the responsible investing principles are applicable to you. Next, please. Next slide, please. All right, so over here, I think I mentioned if we start looking at this as a business imperative, right, then you will realize that you have no choice but to start changing the way you're working and changing the way your business is going forward. All right, the SG Green Building Master Plan is actually just part of the bigger plan that Singapore has in terms of going green. And why is it such an important agenda for us to become a green economy? It is because being a green economy helps Singapore to remain competitive and economically viable in the world stage. We are an open economy, so many of our sectors are actually open to trade pressures or other pressures coming through from geopolitics and other countries. So if other countries like China have pledged carbon neutrality by 2060, and other countries like the UK is really going on this track, or New Zealand or the US, even now under the Biden administration, and you would know that 7 pillars under the Biden administration, all of them are linked to sustainability in some sense. If all these big economies are starting to open up the gateways for new markets and new green products, it also means that Singapore has got to be one of the places that they would like to do business in. So the SG Green Building Master Plan is actually just one component of the Singapore Green Plan. And it says that in any case, they are hoping for 80% of the buildings over here to be green by 2030, right? They are hoping to do so not just by reducing your operating carbon emissions, because when you operate a building, you would have definitely some emissions or environmental impact through your water use, waste use, as well as your electricity use, but to also help building owners look into their construction and their life cycle impacts. Where do you buy your materials from? How do you think about your AEI? Are you contributing to a circular economy where you're actually looking at a whole of life design approach, an operational approach towards carbon emissions, right? So all of these things, when you think about it from how the economy is changing and how you actually need to stay relevant, it takes a very different slant to how you plan your strategy and the next few years going forward. Kelvin and Ivan have also covered in quite detail around the Green Finance Industry Task Force. I will not talk about it much more, other than the fact that MAS is looking at it both from a risk and opportunities angle. So on the risk side, all REITs as well as financial institutions now need to think about who they invest in and who they lend to, so that their risk exposures arising from climate change can be mitigated. So if you are not a green building owner, you know, in future, you may not have access to funding because the financial institutions, including banks like UOB, including your investor groups, you may not be able to pass their criteria for extending finance. In Europe, we are already seeing this happening. Right now in Asia, we are still very fortunate to say, okay, look, during this time frame, if you be a leader and be much more forward-looking, and you want to be one of the first few people to really explore converting some of your MTM programs or some of your loan programs into sustainability-linked instruments, then you are eligible for some incentives from MAS. Next, please. Now, there is actually a lot to do on the operating front, and just like Kelvin and Ivan shared, there are already some companies who have gone out and started to dabble with some of your green bonds, as well as other more innovative products like sustainability-linked loans. CCT is just one of the examples. But because the space is moving so fast, as we start to think about how we want to change our green buildings and change the kind of investments we have, we are also talking about very real considerations, such as how much capex and how much budget you need to put aside. Now, going green is sometimes rather easy, low-lying fruits. Sometimes it calls for operational change or a change in the way we actually start to operate in terms of, how you gather data and how do you look at your AEI, your investments and so on. So in some cases, it can be more expensive. And in all cases, regardless of whether you're going for the short-term or the long-term benefits, every other step that you take, whether it includes your CAPEX, it looks at digital solutions, technology, whether you are going for product labeling or you want to do a life cycle analysis around your purchases to check on your embodied carbon, all of these things will actually require financing of some sort, which is why to take advantage or to take note of all the financing instruments that banks are here to offer right now will also give you a sense of how you may best leverage on some of these debt instruments to service many of your priorities. Next, please. Now, one of the things that we found when we speak to many of our real estate clients, and KPMG does have a huge share in real estate, fortunately, in this part of the world, is the fact that, data collection and having a clear view of what their environmental performance or social performance is sometimes can be very difficult. Now, if you have one building, it could be quite easy for you to keep on top of how you're doing. It may be easy for you to make certain decisions. But what happens if you're holding a huge portfolio of buildings, and different kinds of assets, hospitality assets, residential, commercial, industrial, and they are in different parts of the world? How do you then keep track of what's happening over there? How do you keep track and differentiate between master leased buildings and also those where there's a common leasing, right? What do you actually do as an asset owner? How can you then work with your tenants on all these things? Now, in order for you to stay on top of all these things and also to be able to make certain cost-effective investment decisions around what you like to invest in, you do need a lot of data and reliable information. So for many of our clients, they have actually started to look at digital solutions as one of the key things that will help them go green at a much lower cost and also help them to change the way they work into a much more progressive environment. So CAI is just one of the tools. For example, when your investors are asking you for your environmental performance, or maybe you have taken up a loan or a bond with UOB and you are required to report on your impact. You may choose to do it manually through Excel spreadsheets, briefing all the data owners in all of your locations, or you could set up a digital platform to actually remove the burden on the manual tracking, starting from sensors or IoT in your buildings itself to actually capture real-time data that will help you not just report at the end of the day your impacts, but also help you manage and reduce some of your environmental impacts. So some of the IoT, which you may be more familiar as well, would include sensors that actually feed back to your computer system so that you can do your building management around your air conditioning use, your emissions, or maybe some of your energy or water usage. Next, please. All right, so if you look at the tool over here, what it says is that progressively more and more clients find it difficult to move into the digital age as well as embrace sustainability without trying to integrate both of these different pillars, starting from using different technologies that will help you capture data as well as analyze it, to making sure that the reporting in-house is happening, right, to your board of directors, your senior management, and all the people that need to be in the know in order to make improvements or to perform oversight, all through to disclosures to your banks or the different stakeholders or inside your sustainability report, and then using this information to actually also consider whether carbon trading or emissions trading is something that is possibly opening up a new revenue stream for you or other income stream for you in the future when the carbon markets are becoming much more active in this part of the world. So having that data around your properties will give you very good visibility. And then with this convergence and this change, it also makes it much more necessary maybe for you to consider sustainable finance, or maybe easier for you to think about, how do you convert some of your financial instruments into funds that actually support your investments in this area. Next, please. All right, so there is a lot to do, but there is also a lot of support. So starting from the government agencies, where we have announced Singapore Green Plan and different coordinating agencies looking after each of the sectors. BCA and SGBC are also there for you to talk to when you have green buildings. You can talk to your bankers like Kelvin and Ivan, or speak to Esther or myself. So Esther really has a very good overview, and she has a lot of experience working with different organizations. Or you could talk to me, for example, where you may need somebody to bounce off ideas on your sustainable financing strategy, or if you think that you find that it's all too much to measure and you just want to start off with something small. All right, but really talk to people, understand the requirements, decide whether or not you need to go further with expert advice, or whether it's something that you're comfortable to do in-house with your capabilities. Build up your ESG framework so that you are looking at this as a business strategy and a priority, and then go into the execution. All right. But the most important thing, I think the message here is that think about it from a business angle. What do you actually need to continue being sustainable as a business? And the funding around it will actually need to come pretty significantly with many, many incentives that are available for you right now to jump on and consider. All right, so that's all I have to share for today. Thank you very much.
Thank you so much, Cherine. Before I move on to the Q&A session, I would like to do a quick poll with you, our audience. Can I have the poll launched, please? Yes. We'll have the first poll coming up very shortly. The next poll is coming up shortly. The third question. And finally, we have the last question. Thank you so much. It's time for today's Q&A session. I think in view of time, we'll try our best to answer as many questions as possible. But please bear in mind that there's a time limit that we have today, and for questions that are unanswered, we will work with the panelists and email the responses to you after the webinar. So I think if I can turn to Ivan for the first question. I think one of the most common thing that we encounter when we talk about this issue is, will there be interest discount from banks if corporates take up sustainability financing? And if not, what is indeed in for them? Would you like to take that question first?
Sure, Sue. I think that's a very common question from our customers, asking us whether there is interest discount for green and sustainable financing. And I would say the simple answer is no, not because the banks are stingy, but rather because the bank actually doesn't enjoy any cheaper cost of funds, nor cheaper risk-weighted capital for engaging in sustainable financing. So the difference between sustainable and non-sustainable financing is actually the same. But having said that, the bank recognizes its role to enable sustainability among its customers and to help them in their journey. So on a case-by-case basis, we do discuss with our customers how we can support them, not just in terms of pricing, but rather we look at their entire financing need, ranging from loans, overdraft, trade facilities that we can also do, as well as cash management. So when it comes to enabling the FIs to bundle a solution, then we may be able to offer a more competitive package.
Thank you so much. Kelvin, I think we have a question for you. Are there any particular regions where green building benefits are very attractive in comparison with others?
Hi, thanks for the question. By and large, I don't think the question is more of which is more attractive, but it's all a question of relative. So for example, in a market where, let's say you are less developed, then moving from a low base to a green mark certified building, that will actually see more benefits. Versus say, for example, in a market where you are already quite top notch in terms of your rating, but then you just need to move up one scale up to a next level of green mark building, then the benefits will not be that pronounced. But again, I'm not so sure what does the benefits actually mean. So if I may just expand that definition. So if you're talking about benefits in terms of, let's say, impact on valuation. Now, if that is also the intent of the question, then my response is definitely that we were expecting to see some valuation uplift. But then as of now, the valuation uplift, based on what I've understood from my conversations with various industry players, is that it's not very significant, primarily because cap rates has not moved. When investors invest in these green buildings, they are very conscious of the cap rate. So the cap rate has not moved much per se. They don't say, oh, because it's green building, I'm going to pay more, right? Contrarily, they will not pay less because it improves their returns. But certainly once you get into the green building space, you are actually able to reduce your operating expense significantly over time. And that definitely will improve your net property income. And then based on the same cap rate, you actually will get a higher valuation uplift. So if you're talking about green building benefits in that space, I think we are expecting some kind of uplift, but not say the likes of 20%, 30% and stuff like that. I hope that helps.
Thank you so much, Kelvin. And if I could attention this question to Cherine from KPMG. On the CAI tool, can KPMG provide the verification of the impact reporting? Must the company be an audit client of the KPMG?
Yes, we can do the impact reporting verification, and no, the client doesn't need to be an audit client of KPMG. I mean, for financial audit, so we can be performing this service for all clients.
Okay, thank you so much, Cherine. If I can just move on to Esther, you have actually diligently typed in a lot of replies in the chat box, but if I can just pose a question to you, what are some initial steps or actions that SME can do to start on their sustainability journey?
Sure, no problem. I had the benefit of going first, so I had the chance to type in some questions as I went along. So I think it's all about taking the small steps. I think just looking at the poll questions, there's a spectrum of people on different phases of their sustainability journey. I think first is creating that awareness and understanding of what are their ESG issues, whether the areas that concern their business operations and strategy, where they're making the biggest impact, both positive and negative.
I think from that point, looking at assessments, right? Taking some, this could be done as a self-assessment, but also engaging in consultants to help them go into the details on where they can, where they're doing well and where they can also make improvements. I also feel that then it's around the adoption of different policies and practices that's important for their company, and this also involves engaging with different stakeholders, so the C-levels, the boards, and so having that conversation across different stakeholders, internal and external, to understand their views. And then I would say is then taking that small step to start looking at, where are some cost saving measures I can do that will help with sustainability. Something as simple as, perhaps installing smart sensors, right, that can help reduce the use of air conditioning lights when it's not in use. So little steps, right, to get you on the path to sustainability.
Thank you so much, Esther. I think in view of time, we have actually just time for one last question. And so this question is on, speaking with some of the banks working on green or sustainability financing, I learned that there's no difference in interest margins between green loans and traditional corporate loans, while sustainability financing may save the company, 5 BPS if the targets are not met, if the targets are met. And given the extensive work involved, why do companies want to do this, except for perhaps PR reasons? Would any of the panelists like to address this question?
Okay, maybe I give it a stab. And I think the reasons for embarking on it, as Esther rightly presented, multifold. Interest and cost savings is just a portion of it. It's not in its entirety. I think in terms of, instead of looking at the cost, the company should also think about the benefits that comes with it. I think it's not just about PR and marketing. If you look at a lot of the surveys out there, the consumers of today, which are the millennial generation, are very aware of ESG issues, and most of them would expect the products that they buy to be sustainable. So the profile of the consumers are changing, and because of that, the large MNCs that are probably customers of a lot of the Singapore companies who are suppliers will start to demand more and more sustainability in their supply chain. It will impact the tier 1s, and then it will come to the tier 2s, and finally to the tier 3s. So ESG is also about business, your business strategy to differentiate yourself so that you are in a better, more competitive position when that analysis comes in. So from our perspective, interest savings and cost is just one aspect of the entire conversation.
Hi, this is Kelvin. Shulim, do you have time for me to just layer in some comments here?
Yes, please, Kelvin, please.
Okay, we just looking for that question in relation to real estate. I think one of the things that I want to always reiterate is that it's not just more for branding per se, or for PR purposes, because in practical on the ground, we're actually seeing cases where some tenants are actually saying, look, especially for those tenants from the Western economies or MNCs that are coming into Asia, they actually have a lease for the selection of buildings for them to lease. And one of them is green buildings. So you need to check off that box. So in a practical sense, that means that if your building is not green, then it will have an impact in terms of whether the tenant base is large enough for you to tap on. So you may actually totally miss out on the MNC's tenants pool, who might be very focused on green buildings, because you need to tick off the checklist. So it's not just more for PR, but going into this green space has practical implications. On top of that, I think, as I just want to reiterate also, in terms of our operating expense, if you do go into green buildings, you actually enjoy the benefits of innovations in terms of the technologies that you invest into turning this building into greener. So these are the practical aspects beyond just the PR branding angle.
Thank you so much, Kelvin. And indeed, it's not just for PR purposes, but there is a real demand from companies watching out for such things. And before we come to the end of the webinar today, I would like to share the poll results from the quick poll that we did just now. And yeah, can we have the results of the first question, please? Would you consider taking on sustainability financing for your projects? And 69% said yes, and we have 33% undecided. So I think after this session, we will get in touch with you, or you can email us to tell us what are your needs. The second poll. Okay, so I think 61% said between 6 months to a year is the reasonable time frame to embark on green journey. The next poll, please. Yes, indeed, there is potential cost savings, as we have heard from the speakers. And the last result. Okay, so it's a very interesting feedback that we have from the audience today. Thank you for your participation. But before we close the session, I would like to have I'd like to invite the panelists here today to share with us their short closing remarks, starting with the ladies. Starting with Cherine, are you ready?
Sure, thanks. I think the one last thing that I'd like to leave behind is that this is actually a very practical and very real issue that we are thinking about. So it's nothing to do, not just to do with your PR or your reputation or even your access to finance, but it is really about how you remain competitive and whether or not your business is going to continue being able to survive, right? So like Ivan shared and Kelvin shared, there are already increasingly more and more consumers, individuals, as well as corporates who choose, and they are very, much more selective about the kind of buildings they house their operations in. We have seen that not just from the global players, but also from local companies. And as you know, Singapore has already announced their intention for green plans. So the government agencies and the public sector themselves will also be more selective. So it is something that is very real, and the timeline is very short. I think we are looking at about 2 to 3 years. In the next 2 to 3 years, we're expecting a lot more action. So please do be alert, and any other financing needs that you have to help yourself transit, that will be available from the bank as well, and from some of your government agencies like ESG, who will be rolling out the enterprise sustainability plan. All right, thank you.
Esther, would you like to share your closing remarks with us?
Sure. I think I just want the group to think about the cost of inaction. I think the pressures are there, so are the enablers, and doing nothing will not serve well in the competitive landscape. So I ask people to think about the cost of inaction and also how to do more with less in view of the constraints that the reality that we are facing. And to stay connected with community, with everybody here. And if you need any resources, the parties, the panelists that they represent, as well as GCNS, we are here to help along. So know that there is support along the way.
Thank you so much. And Ivan, please. Ivan, can I have your closing remarks?
Sure, yes. So I think most FIs, or in fact all FIs, recognize that there's a cost to sustainability. We are very pragmatic. Then necessitate investment in equipment, manpower, and time to set up your sustainability strategy, roadmap, and execution. Now, it is also not fair for FIs to bear all the burden. But having said that, I believe we are in a very good place where the Singapore government has come out very strongly on sustainability. There's a lot of grant coming out from the MAS as well as Enterprise Singapore. In fact, we are working with them to work out some sustainability packages for SMEs to help you along. And we are also trying to make the process more seamless as well as a lower cost for you. But at the end of the decision still lies in you whether sustainability is right for your business and what are the end state that you want to get your business into. I think those are food for thought for the participants here.
Thank you. And Kelvin?
Hi, I think all the panelists has basically spoken on my thoughts. So I just want to maybe conclude by saying that I think this green sustainable movement is here to stay. It's not something that we can keep delaying or kind of push it around. Something that we need to confront today, because the government is actually pushing along with various incentives as well as measures to encourage compliance as well as adoption. So I think what we're trying to do today is to showcase what UOB as well as the various companies represented over here, how we can actually assist you in your journey. And I think we are all ready to begin this journey or even to accelerate this journey for you. Yeah, thanks so much.
Thank you so much, Kelvin. And thank you so much to all the speakers for joining us today. Before we end the session, I would like to just tell you that we will be organizing the second webinar in this series with UOB. And the next session will be on financing for solar projects. So if you're a building owner or in the build sector, you should really consider attending our next webinar and learn more about financing solar panels and installing them on top of your buildings to harness energy from the sun. Together with UOB and KPMG, the SBF will be conducting the business consultation session after this webinar for companies who are interested. And from the Q&A session and the questions that we have been receiving, there is certainly a very strong demand in this topic. And do reach out to my colleague, Ms Cherine, for a complimentary tailored business consultation session provided by SBF, UOB, and KPMG after this webinar. And if you would like to understand more about what SBF Infrastructure Committee does and the work that we deal with, please check out the details on the top right QR code. And we would really like to invite you to join our infrastructure interest group by filling up the form at the bottom right QR code. This is an interest group where we look to engage with you on infrastructure and sustainability development issues, projects, opportunities, and thought leadership. Last but not least, we would appreciate if you can take a few minutes of your precious time to fill out a short survey form pertaining to this webinar by scanning the QR code on the slide. And once again, my name is Shu Lim from the Singapore Business Federation, and I'm very honored to be your host for today. Thank you for staying with us over the past 1.5 hours. Stay safe, and I hope to see you again.